Welcome back, guys. It's Saturday. I'm going to do a quick video, try to keep it under 10 minutes. Just going to wrap up the week with this video and point out kind of the key developments that took place in the market over the last week. Again, a lot of you know, obviously everybody I think that's been following me for a while know that I've been a bear and I've been looking for opportunities to the downside. I have my reasons, and most of them have to do with the fact that the S&P 500 trend line has broken. We'll show that real quick. Here's your weekly chart. Here's your bull market trend line right here for the last decade, going back to 2009. You can see held support, held support, broke support, back test. Here's another back test, failure. This is a topping pattern. Volatility is increasing. We're starting to top out of a big major bull market. You know, the longest bull market in history. Makes sense that you'd have a big topping pattern. There's a lot of money and a lot of hot air basically piled into this bull market, and people don't give it up right away. So it makes sense, but ultimately the trend has been broken. We're now topping out, and I think this was a bear market rally, very impulsive. And, you know, Fed-induced. But again, the entire rally for the most part was Fed-induced. So that's why they call this the central bank bubble, because this rally was created by the Fed. And so were these kickback rallies here. This was created by the Fed, and this was created by the Fed. All right, getting into this video, what I want to do is go through some of these sectors. We're going to start out with tech, and we're going to go to the hourly chart. And I want to point out what we're seeing here, what happened over the week. And nothing bullish, let's just put it that way. Here's your trend line. Let me get rid of this line here. Here's your trend line right here. And we've been walking up this trend line on an hourly chart ever since March. We've just been walking up it, so everyone can say, okay, the trend is your friend, ride the trend. Well, the trend broke this week. Here's your breakdown of the trend, and the trend is now no longer intact when it comes to the technology sector. And so this to me looks like we're just bear flagging. We've got this line here where we made a move down, kind of flagging out a little bit there, and it looks like it wants to continue to the downside, you know, making out a resumption of the flag down, maybe something like that. And that would make sense. That's what this is kind of set up for. Now, this is tech minus Amazon. If we get a look at tech with Amazon, we look at the Qs. And the Qs has not broken down. Here's, you know, it's basically just barely hanging on to support. And that makes sense because Amazon hasn't reported earnings yet. They do that next week. So when Amazon reports, it looks like it's set up for Amazon to miss. And when Amazon misses, or if they miss, I suppose, that's the setup anyways, then this will break down as well. And this also looks like it's bear flagging, where you have the impulsive leg down. You have a flag that it's making right here. Just basically right at support, and then you get the resumption of the breakdown, and that would come most likely with an Amazon miss. So it could be a gap down, you know, something like that. That's just a setup that I see, and also if that happens, then that's going to set us up for a weekly breakdown or recapture of the channel. If we get a resumption of the sell-off after Amazon reports, or Apple, it could be Apple as well, that'll bring us back down maybe to the 247 area. And that's going to bring us back to within the channel of the bull market that Qs has been in. Qs is still in a bull market, has not broken the bull market pattern. The S&P 500 has, and that broke back in 2018. But Qs continued its bull market pattern. It did break it twice, here and here, and this is where the Fed did everything they could to save it. So I think the Fed targets these to try to save this sector because of the heavy weighting of the mega cap stocks. They can influence the S&P 500, but because those mega caps are so huge, you got to move a lot of money into those in order to keep those from coming down. So this is your trend channel, though, your bull market trend channel. We got to the outside of that channel right here. Anytime you get to the outside of the channel, look for a failure, high probability that that's going to fail and come back down within the channel. And if you come back down within the channel, maybe we grind around a little bit at the top of the channel, and then ultimately I think we work our way to the bottom of the channel. When we get down to the bottom of the channel, or if we do, I mean, it's not a matter of if, it's a matter of when. We will get to the bottom of the channel. Will it be down here, or will it be over a longer period of time where it won't be down as much? But, you know, we will get to the bottom of the channel at some point in time, I believe. And when we do, we'll have to evaluate what the rest of the market looks like, because that might be the end of this bull run in this in triple Qs, and we'll start the bear market, which is, you know, a move down. I've got some targets down here for my longer term targets here, 115 and also 98. So I'm going to leave those up there. I think those are still very relevant targets for kind of the bear market, longer term bear market targets. Let's move on. XLV. So XLV here, we'll go to the hourly, and XLV, you've got resistance right up here. You can see that we were basically just kind of walking. Let me adjust that slightly. It's right about there. We were just walking along, you know, coming up to the resistance. We overshot it right here. You can see we were holding resistance here, started to break out. This looked like a breakout, and that breakout failed, and we impulsively sold off. So false breakout in XLV. That's what I was telling everyone. I looked exactly like that's what it was going to do. If you look at the daily, here's your breakout right about here, and no volume. So again, when you have breakouts of levels, key levels, and you have no volume, it's not confirming. High probability that it fails. And that's exactly what it did. And it failed impulsively too. So that's a sell signal. Basically, you've got a reversal at the top with confirmation right here. So kickback rallies to me seem like objective areas to start short positions or add to short positions in XLV. Back to the hourly. Ultimately, I think we get back down to the bottom of the channel or bottom of major support, which is down here at 97. Very clean, crisp support sitting down there at 97. And if that breaks, that sets us up for the resumption of the bear market, basically, in XLV. Here's a weekly chart on XLV. I don't look at this one too often because the SPY is really what you need to watch for the bear market, bull market calls. But XLV, you can see here, here's the 2009 lows. And you can see we walked up this support line. Let me see if I can zoom in here. See the weeks, how they dipped below intra-week, but still recovered and held support throughout the week. See the tails, how they dip below, but then still recover that trend line. So that confirms that trend line is intact. And now as you move up, you can see here's another test of it there, another test of it there, several tests of it here where each one pretty much held that support. We held it here. And then in 2018, just like the S&P 500, it broke. And here's your breakdown. This is a back test. They started to recover it, but it failed shortly thereafter. And then in 2019 and 2020, did a full back test, impulsively sold off, kickback rally. I think we roll over. So that's what this looks like longer term. But first, hourly, we got to get down to 97 and break that. Let's look at XLF. XLF here looks very weak to me, although XLF is still within this rally trend line. You can see coming off the March lows here on this hourly chart, we've just been walking up this trend line, but it's changed a little bit. And here's what I mean. When we hit the March lows, you know, you were extremely oversold, and so you got an impulsive rally off the bottom. And it, you know, you can see how impulsive it was, you know, from the lows all the way up to the very highs of this rally. It went up 34%. Then you came back down and hit the support line again. And this is essentially what established the support line. We hit it again and impulsively rallied off the bottom from the low there. We rallied up about 34%. Then we've come back down again to the support line. Now the support line is getting a lot more mature. And there's no rally. There's no impulsive rally off the bottom. As I zoom in, you can see all we're doing is just grinding along this support line. We dipped below it once. They came in and did a recovery patch job, exactly like I said they were probably going to do. So they recovered the support line, but it's just not able to move impulsively higher. It's just grinding along support. So to me, this looks weak. You know, the price action looks weak. Yes, it is holding support and moving higher. Support, it's still support, so it hasn't been broken. But one gap down, and you could easily recapture like this whole month's worth of price action right here with just 1 day's worth of a gap down. And that's what it looks like it's going to do. It looks like looks like the financial sector is going to gap down and start to move lower. And it hasn't happened yet. So you need to see that for a confirmed sell signal. And we just have a setup right now. And the setup that I see is just really weak price action, grinding along support. Looks like it's just barely hanging on to life, and it's going to fail. Okay, I'm going to wrap up the video here. Just wanted to cover the major concepts and themes and the three sectors that matter. XLK or QQQ, basically the tech sector. XLV, the healthcare sector, the second largest sector in the S&P 500, and XLF, I believe that's the third largest sector, and also it's kind of the lifeblood of the economy, credit basically. So important to watch, even though it's not as heavily weighted as it used to be. It's still really important for a lot of the other sectors when it comes to credit and financing, and how the economy functions is through financing and credit. So XLF is important to watch for reasons beyond the weighting that it carries in the S&P 500. So those are the three. Wanted to cover those. We'll start it back up next week, and basically big earnings. So there's going to be probably a lot of fireworks, a lot of movement happening. Amazon and Apple report early next week, and that is going to set the stage for this next move. So thank you guys. Appreciate it. Catch you on the next one.